Inflation numbers coming out here in just a few seconds. Let's see what we get from producer price index. See if we get any reaction. Okay, initial reaction here is very positive across the board here. Stocks higher, gold higher, dollar index lower. That would, at least on the surface, suggest a lower than expected print on the producer price index. My guess is a 3.2% reading. Okay, 3.3. So we got a 3.3. That is a lower than expected, and as you can see by the market's reaction, a better than expected number. And this makes sense, guys. We've got everything reacting accordingly. Dollar index lower, right? Cooler inflation, just like we discussed. Russell up, Nas up, S&P, Dow Jones up, and Bitcoin up. Good start. Good start. That's what we wanted to see, right? What we wanted to see here, I mean, I'm speaking for we as in the kind of global markets perspective. Good market reaction would be off the backs of a cooler inflation print. We want inflation to go away and take a break and stop making our grocery store experience so painful. We want inflation to cool off. So this was a good print, an S&P 500 taking out the highs. Let's take a look at that S&P. I've got a long position on the S&P, so a nice reversal here mid-morning. Back in the green on this position. Somehow, I mean, this thing looked terrible yesterday. Reversed course, and we are back in the green on this trade. I'm also long Bitcoin. So Bitcoin loving this here, up almost 3% today. Very nice. I'm long IBIT. Take a look at that position. Yes, sir. Very nice. Nice reaction here off this level. This is what we wanted to see. Cooler than expected inflation. Very good for Bitcoin. Very good for risk assets in general. And you guys know I trade Bitcoin very often, but I'm not a crypto Super Bowl. And I believe that it is very correlated to other risk assets. It is not, you know, it is a special thing. It's a very cool thing, but it's not special in the sense that it's not uncorrelated to other markets. It's very correlated to other markets. I'm long S&P 500 for the same reason that I'm long Bitcoin. I think the economy in the US is holding up well, and with cooler inflation data, we'll take that. That is good news for the economy. We're ripping here this morning, got several trades going well. The S&P trade, we can take a look at that as well. Very nice reversal on this position here. And again, going to continue to monitor that. By the way, guys, I'm going to just go ahead and double check that I don't need to update anything on my trade side. So let me just make sure. S&P trade. I'm not going to trail a stop just yet. What I'm going to look for on the signal inside of the group, guys, is I'm going to wait for some sort of breakout of this trend line here. So I've got this downward trend line. I'd like to see a higher high form. I'd like to see this break. If that happens, I'm going to look to lock in some profit on this position. Otherwise, I'll keep the trade open. And if it stops out, it stops out. It is what it is. But I like the upside potential. I like the risk to reward here. Long risk assets, long NAS, or long S&P, and long Bitcoin. I'm also long the semiconductors ETF, SMH. I've got some healthcare names as well in my portfolio. I'm long TLT, which probably loves this today. Let's see. Come on, TLT, do something for us. TLT up 0.15%. So maybe not so much of a good reaction there. Although yields are lower here this morning, this is what we want to see, right? We want to see that 10-year yield. Let's hope, for the sake of risk assets, that this was a false breakout here around that 4.7%. If you get a break and closure back under that 4.7%, I think stocks go higher. I think Bitcoin continues its rip, and that would be a preferable scenario here for, obviously for me. I'm telling you preferably in terms of like what I'm looking at in the markets, but I know, of course, if you're on the other side of this trade, then you want the exact opposite to happen if you're a dollar bull. And I am, you know, generally speaking, I've been more on the dollar bullish side, although I'm not in any trades right now. I took dollar Swiss long. We took a signal on that one inside of the group, ripped this thing higher, took profits on that. So I don't mind if the dollar pulls back, and I'd honestly probably look at some longs if I could get it. But I think it's a little overextended, and I think that yields are closer to a top than they are to a bottom.
The Edge Finder is the #1 trading tool for 2025. The Edge Finder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edge Finder. The Edge Finder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edge Finder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edge Finder.
I'm not making a point to say, oh, I'm getting long the euro, because I actually think that that's incredibly dangerous, and that retail has been getting smashed by that very same thinking by saying, oh yeah, the euro is oversold, I'm going to buy it, for the last 6 months. Right? Look at euro in the last September until now. It is down 9% against the dollar, 1,000 pips to the downside. And throughout most of this, guys, on the stream, we regularly pull up retail sentiment in the Forex world to get an idea of where retail is long and short. Well, retail has been consistently short the dollar. So if you're long euro dollar, if you're long pound dollar, the Australian US dollar, if you're long this currency pair, you are shorting the dollar, right? You're long Aussie, you're short US dollar. You're long pound, you're short US dollar. Well, shorting the pound has been a very popular retail trade. Shorting the dollar has been a very popular retail trade in recent months, and it's cost them dearly. This has been a really, really bad period for a lot of traders who are fighting this. And I don't know if you guys have seen this, but I've seen it all over like Twitter. I never call people out by name, but I've seen so many people who are trying to call the bottom on things like the pound. They're trying to call the bottom on the euro, the Kiwi, the Aussie. They're trying to say the dollar has topped out. And we just don't know where the dollar has topped out. US economic data has been so incredibly beyond expectations for so long now. It has surprised the most eager of analysts, right? Analysts have been completely wrong on how strong the US economy would hold up. The US economy is like accelerating after all those rate hikes. You can see it in the 10-year yield. The 10-year yield is accelerating higher. Guys, look at this. So before rate cuts, people were like, okay, the Fed's going to start cutting rates. They cut rates September 19th, 2024. And yields reversed. They said, you're cutting rates and inflation is not yet done because the economy is still nuts. The economy is still doing crazy good, right? And when I say the economy is doing crazy good, I'm not saying everybody's doing well. It's just an aggregate level thing, right? Services, PMIs, we can point to so many things that are beating expectations in the US economy right now. That's why this is trading where it's trading. So the U.S. economy is holding up really well, given the circumstances. So that's why the dollar is so strong. So trying to time the end of that trend has been the bane of retail trading existence. Retail traders have consistently fought this uptrend in the dollar, and it's cost them dearly. So what do we do here on this stream? We do the exact opposite. We find those trends that are dominant. We find the easy trade, if you will, and we ride it, and we find appropriate ways to exit that idea when there are signals that it is truly reversing. The way I know it's truly reversing, and it's not perfect, but it's a lot better than just staring at a technical chart, is the data itself. Watch the economic data, learn it, understand it. What is it actually pointing? Look at if I go major currency pairs and look at the US dollar, look at how blue the US economic section is compared to for other currencies like euro dollar. Look how red that is, right? Saying just favor the dollar everywhere. This is pretty uniform. Until this changes colors, that's my indicator. When this all changes, reverses colors and stuff, and we get some neutral readings, until that happens, I continue to not fight the trend.
I'm currently in some euro dollar shorts, nothing too crazy right here, just dollar cost averaging as I always do. I'm currently also in a pretty precarious position here on the euro pound. This one definitely isn't the best trade I've been in for the start of the year, but it's okay. It is what it is. We can't always have the perfect trade. I'm still in it, still happy to hold. I'm looking for some sort of reversion here. Obviously, we all know, well, from what I've seen in the chat, we all understand that the pound isn't necessarily in a great spot in terms of its bullish potential. However, This market is very extended to the upside on the daily, even the weekly. So I am looking now for a simple mean reversion. We do have, or I do have, dollar Swiss longs open as well. So that one's very bog standard swing trade, nothing too crazy really to go over on that one. Obviously capitalizing on the dollar strength that we're currently seeing. Ball out. Do you not like Bitcoin? I assume. Dollar index 110. Yeah, I'm still pretty certain we're going to get 110 on the dollar index pretty soon. Obviously, it depends on how the data tomorrow comes in. We do have a pretty heavy day actually tomorrow. Let me just double check what we've got. So it's mainly UK. So we've got CPI for the UK month on month, year on year, and we've got core CPI year on year as well. We've also got consumer price index, or CPI for the US month on month, year on year. We've got consumer price index, food and energy, month on month, year on year as well. So yeah, pretty heavy day tomorrow in terms of news. So I wouldn't expect too much movement in the markets today, as we are seeing some consolidation ahead of news. But yeah, I think generally speaking, 110, and then once or if we can break 110, I would suggest we are then looking towards 112. Now, the reason I'm looking at 112 is pretty simple, actually. So I'll show you the reason I'm looking at 112. So if we go into the 3-month chart, so the quarterly chart, we do have a very nice ascending channel here that's been formed. It was sort of in between 2008 and 2011. It really depends where you draw it from. But if we look at this 112, it does line up very nicely with these previous quarterly candles. So it makes sense really to target those. Of course, keeping an eye on the incoming data. But generally speaking, that seems like a pretty good idea in my view. View on Australian dollar, US dollar. Yeah, I think really we are pretty set to continue to the downside really on dollar crosses. Again, we do have a pretty big day tomorrow. We also had PPI today. But generally speaking, from what we've currently got going on with the dollar, downside seems like the best idea. So if we head over to the Edge Finder and see what we've got here, we do have euro dollar, Australian dollar, pound dollar, and New Zealand dollar all reading bearish to very bearish. New Zealand dollar being the most bearish one of them all. We've also got US dollar, CAD, and oil. I was talking about this morning, this morning on my stream, that although I don't mind US dollar CAD, I'm a little bit conflicted because obviously if we're looking to buy oil, that would mean we are also expecting a bullish Canadian dollar. So if I wanted to buy oil and buy US dollar CAD, I'd kind of be playing it the same way opposite ways in terms of selling the CAD and buying oil, which isn't really how I like to trade. So I'm staying out of dollar CAD and I've reverted to US dollar Swiss instead. Your AUD USD short, we have at least 250 pip move. Fair enough, if that's what you think. I'm right behind you on that one. I'd love to see further upside on the dollar, further down on the crosses. Ball out, are you having a little tantrum here? Can you imagine BlackRock owns the Bitcoin supply? Instead of having currency freedom, the world will become slaves to them again to them. Yeah, well, we'll see. We got PPI 3.3, so CPI should be lower as well, potentially. Yeah, wouldn't be a surprise if we do see the dollar bearish tomorrow. Andreas, hey James, what's up? That's a nice wallpaper headline you got there behind you. Thank you. It's a segment from the Daily Post, October 24, 1929. Wall Street panic, stock market crashes. I've got to be honest, actually, I have no idea if it's a real segment. It looks real. Obviously not an actual segment, it's a canvas, but I'm not sure if it's a copy of a real one or not. I would assume it is, but I just thought it looked cool. Analysis on gold. Just facts, no tantrum. Yeah, fair enough. Yeah, so gold still isn't really in a place where I'd want to take any trades. It's stuck within a range, or remains within this range. There's no clear trend. There's no reading on the edge finder. So until we are able to see gold break out, either way, there is nothing for me to do here. So I would really need to see either a clear break to the upside and see fresh highs getting put in, or a move to the downside, break out of range and continue down. The trend overall remains to the upside if we're using the moving average for guidance, but the problem is there's not really anything that makes me want to buy gold in terms of geopolitics or macroeconomics. There's just nothing there really. Euro Australian. To be honest, similar thing here. There isn't really anything I'd like to do. So the Australian dollar is relatively weak. The euro is also not really in a place where I'd want to start buying it. So I would really just be looking to sit out of this market, generally speaking. The trend does look to the upside, although this moving average is very sort of horizontal. Short-term trend here is bullish. So if you are just trend following, to be honest, I think this makes the most sense in my view, something along these lines. But again, it's not really a trade I'd be interested in. Any analysis on Euro US dollar? Yeah, it's my favorite pair. So Euro US dollar, in terms of technicals, it's pretty irrelevant as far as I'm concerned. I mean, every technical level essentially has been violated. So we had a really nice support here. We saw a minor pullback, some slight bullish moves off there, continued by further downside movements. Similar thing here. We had consolidation at the support level very quickly, well, relatively quickly broken. So yeah, technical levels don't really mean much at this point because the fundamentals are just so bearish. So I'm still looking towards parity. I think this is definitely achievable. Again, it really does depend on the data that comes out for the dollar over this week. But yeah, generally speaking, I think we're pretty set really to continue down towards the 1.0 parity level. Beyond there, if we don't see any changes within the dollar data or within the Eurozone, again, I'd be just looking for simple levels on the daily to use as targets, which would then just be these three previous lows down here from 2022. Euro USD 1 hour time frame buy. I'm not really a fan of that idea, to be honest. What would make you want to buy? Yes, I can do NASDAQ. Just let me read what's going on here. Bitcoin and XRP. I'll do my best. Grids, hello, good to see you again. How I wish. Okay, so we've got NASDAQ, XRP, Bitcoin, and New Zealand yen. Okay. Okay, we'll start with NASDAQ then. Let's see. So the thing is, with the indices, I don't really have a reason to buy them at the moment. So obviously we had the rate cuts, which were really, really beneficial when we saw essentially continuous long setups on the S&P and NASDAQ. But the issue I have at the moment is this trend ultimately is to the downside. So I'm just a little bit hesitant. I don't ever sell indices. It's not what I do. I only ever buy them because we're going with, if you always follow the long-term trend, it's just one of those things that will always be in your favor. but obviously that still means you need to be able to time it properly. So as far as I'm concerned, at the moment, we're still following this downwards channel. So next move might be higher, but what will happen after the move to the top of this trend line again, I don't know. We could just continue to sort of move down, or we could see a final break here, possibly a retest, and then continuation up to sort of the previous all-time highs. But it's very difficult to really project. Again, there isn't anything that makes me want to necessarily buy or sell.
So this is what the big news was at 8:30 a.m. And you can see here that we have some red prints, which for inflation numbers, probably not a bad thing to see. So we had core PPI month over month forecasted for 0.3 came in 0. The previous print was 0.2. We had core PPI year over year. Previous print was a revised up. This was revised from 3.4 to 3.5, so a positive revision there. Forecasted for 3.8, but came in 3.5. So we're right back to where we had the previous print with that revision. The month over month PPI came in 0.4 was previous. Forecasted 0.4 came in 0.2. Kind of a good thing. PPI year over year. Previous is 3.0. Forecasted 3.5 came in 3.3. So we're still seeing from previous PPI year over year is higher. Okay, so that's up, despite it being lower than expected. We have the forecast of 3.8 for the core PPI came in lower than expected, but again, in line with what we had last time. So, you know, it's flat here, it's up here. We still have CPI data coming tomorrow. Food prices are definitely higher. That's like the takeaway here is like purchasing food. Tomorrow's data at 8:30 for US CPI. This will be the big one to watch as well. You know, the market just kind of takes it. I don't know if one affects the other. Like, is PPI better than CPI? Is one more important than the other? I don't know. But tomorrow's news and the kind of the cluster of like, okay, so here's our chunk of inflation data for the month of January. The thing that's left is going to be PCE at the end of the month. So this going into tomorrow's news, we can obviously get rid of like real earnings and the manufacturing index, but just looking at CPI, this is going to be what I'm watching the closest. Previous year over year for regular CPI, 2.7% was the previous, forecasted for 2.9. So the estimate is we're going to be higher. The core CPI year over year, previous was 3.3 and forecasted for the print tomorrow to be 3.3. Okay, so are we going higher? Are we staying the same? Are we going lower? I don't know. Let's take a look at everything else. So that's what's going on news-wise today. I was looking at some earnings opportunities. I like this BAC play. I've got a BAC in 45 by 47 or 45 by 46. Looking to see if Bank of America can make a run to $47. Chart alarm's already set at 47, and I need price to get above 46. I do want to look at some earnings plays today. Market-wise, we are up a little bit. So we're back in, and this is going to be an interesting spot. I mean, I think some of the 111 trades that I have in are looking pretty solid. Some of the iron condors I've been taking on the indexes have been pretty solid. Is this a kind of orderly fashion for the market to just still have a bit of a decline, but it does so, in a nice kind of slow, steady fashion? It's going to feel weird to be like, oh, won't go higher, won't go higher. I just don't know if this market's going to be just ripping to the upside. I mean, I'm sure traders are hoping that it is. I just don't know if like every rally that we see here is going to be met with some resistance, right? So I'm not necessarily going to say like that's the trend line I'd be watching, but I think that's the trend line I'd be watching. But even before that, I drew this out last week. So looking at the SPY, we are on the right-hand side of this little trend line, right? So these previous highs starting back on the 6th of January, connect the dots, and we are on the right-hand side of the trend line. So I was talking to traders earlier this morning. Is price today able to stay above? So yesterday's low, we had a bit of a rally, took out a previous high. If we stay on the right-hand side of this trend line, I will say this. I'm a little bit more bullish if the market can stay, let's say the S&P can stay above 580. If the S&P can stay above 580, I think that's a good sign. I think we might still be dancing around inside these levels here, but at least from 580 to 599, there's room to go somewhere. The concern would be if we're here today and then we're back down below 580 tomorrow. Okay, so I will just, I'll type this out. So I'll say if we're greater than, this will be the SPY. If we're greater than 580, then there's room to run back to holiday highs, which would be roughly around the 600 to 602 level. Well, let's say 600. 599 is pretty solid, but around 600. If we're less than 580, there's room to continue sliding to the daily 200 EMA, which is going to be down. We've got measure moves on symmetry. We've got measure moves down to like 572, measure moves down to like 550. The 200 EMA is right here. 200 EMA on the SPY is down around 557. So we have room. It doesn't mean it's going to get there all in one giant push, but we could have just slow and steady, lower lows, lower highs. But a break and close and hold above 580 to me looks like we have some room to get back in this holiday area. But a big squash back down to 577 or the lows again of 575 and change. We're going to continue to pester those lows and maybe carve out some new lows. That makes sense. So that's where I'm at right now as far as analysis goes. And NASDAQ, again, kind of the right-hand side of the trend line and this little intermediate move. Are we able to stay there? Now, the NASDAQ looks a little bit tougher because there's been lots of responses right here. And since we broke that 515 level, I mean, we'd have to make a run, get greater than 515. If we're greater than 515, then we turn the corner a little bit. We come back and try to revisit some holiday highs. My concern on the NASDAQ is if you're looking at Mag 7 stocks overall and Mag 7 stocks are lower or under pressure, it's going to be hard for the Qs to go higher. So if Mag 7, if Mag 7 is pushing lower or going nowhere, it's going to be tough for this one to go anywhere. I might look for a quick roll real quick on MicroStrategy. We are trading, so Bitcoin is up to 96. Let me change this back to SPY. Let's go to MicroStrategy here. So Bitcoin is at 96. I looked at a symmetry move to 87. We didn't quite get there. I am debating. So I've got MicroStrategy with a collar that's 305 is my covered call. Did my dollar Swiss hit profit yet? Yay! Dollar Swiss sold for 9,200. Yeah. So I need to check Tasty. I've been in this trade for 2 years. I'm happy to say that this is a lot of profit. So this trade started way back here. 2023 was the start of the carry. So this is January 2023. I have been in this trade basically since these lows. And so I don't think I took a single losing position on dollar Swiss, but I leveled in like crazy for the last couple of years. Trendline breaks, stacked up orders. I had over 25 positions running. That was my profit. So nice chunk of profit on dollar Swiss. I'm out of that trade, I'm happy to say. So congrats if anybody stayed with me. I know it's a 2-year trade, but we probably have like 10,000 pips to show for it. And I finally got the injection of profit that I've been waiting for 2 years. So that's what happens. Like I build these positions and I'm pretty determined to get to a take profit level that I think is reasonable, and 9,200 is reasonable, and I got knocked out, which is great. So 2 years in the making and a lot of money to show for it, which I'm happy. Dollar CAD still hasn't hit my stupid profit target yet. I'm still going to hold this. I'm still going to hold dollar CAD towards 44.80. I think we hit 40. This is dumb. Like, I don't know why I'm. And look, I think this is a perfect example of what Forex is going to do. We got all this chop. I think this market spikes up to knock me out for profit, and then maybe we put in a bit of a range trade or a topping pattern. But you can just see like there's so much liquidity just building right here. It's like I wouldn't be surprised if this market spikes up, runs that area, and then reverses, and then maybe there is a dollar CAD short. But I'm just going to hold this long. So anyway, I think dollar CAD's still totally fine. Other Swiss positions, Aussie Swiss still hanging in there. CAD Swiss should be doing a lot better. It is. I'm looking for dollar or CAD Swiss to get up into this pocket. My profit on CAD Swiss is going to be up here around 6,500, 6,550. And ideally, I'm trying to take this back to these highs around 67. So again, I'm willing to dollar cost average into my CAD Swiss down to here If we are still range bound, then I might throw another equal low in, but I'm still looking to see, does this just measure out? This yellow box is a symmetry move from flash crash low. It's a swing. So low to high, higher low to higher high. That is my measure move right back to that pocket. If this keeps going higher and higher and higher, cool. I'll take some big profit on CAD Swiss as well. Euro Swiss, higher lows and higher highs, which is a pretty good sign. This one I'm still holding all the way up towards like 9,900. Pound Swiss, I'm still holding long, even though this one turned south kind of nasty here the last 200 pips or so. I'm still going to hold this one towards at least highs of 116, 117, but ideally trying to get this 119. New Zealand Swiss, still holding long, willing to dollar cost average into the lows at 5,000. I would love to see a bullish pattern if we can take out any one of these recent highs, like a swing this way. Take out these highs, give something to pull back and accumulate on, and then get a symmetry trade up into, this structure is good. This is a measure move that I think pulled back a little bit deeper. So let me change this symmetry here. There's my symmetry swing. If we're putting in a low right here, then there's a move up towards, not a bad spot. Nice little pocket here and symmetry towards 5,400. So I'll make an adjustment there, maybe consider some take profit at 5,400. This might be a 5-wave move though. So I might go 1 to 2. This is wave 3, symmetry, pullback, and then another push. So either profit target at 5,400 or profit target around 5,600. I'm still willing to hang on to it as long as we get some decent positive carry. If the RBNZ becomes really dovish all of a sudden, starts cutting rates more, then this one might look less attractive. And then Dow Swiss, it just took profit. All right, last thing for today for me, somebody's asking about Bitcoin. Don't ask me buy or sell or hold. Figure it out. I like Bitcoin. I'm going to stay long on Bitcoin. I think Bitcoin goes to all-time highs again this year. I'm just looking to see if we have pullbacks. I still think we pull back to 87 or 79, high, low, lower, high, lower, low. If we get a correction in here, that's all I'm really looking for. Look for a correction. Okay, look for some pullback areas, look for some efficiencies, and see if Bitcoin pulls back into here. This is where I want to accumulate. We start breaking this side. This is where we can start stacking up other orders. But I think we have the ability to get higher. I'd love a 125 Bitcoin this year. I'd love a 150 Bitcoin this year, if possible. Just to show some additional upside. Possibly Bitcoin stands alone this year with like really good performance and it outpaces the S&P or outpaces the indexes. I still think Bitcoin is heavily tied to risk appetite. And we're going to have to look. I think the markets, this is just a little projection here. I think the S&P and the NASDAQ and the Dow and the Russell have to be positive on the year in order for Bitcoin to be higher. If the S&P, the NASDAQ, the Dow, the Russell are negative this year, I don't know how Bitcoin all by itself is going to be higher. Yes, it's diversification. Yes, it's a non-dollar play, but it's still very tied to money supply, liquidity, and risk appetite. And if we have risk off trading, it's going to be tough to see those flows. So again, be patient, but I would like to see it pull back towards like 90 to 80K before I get long.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.